Okay, folks, a quick morning update. We have at 8:30 Eastern Standard Time, we have non-farm payrolls. I've spoken a lot about non-farm payrolls this week. It's the Pimp Mac Daddy of economic data. The numbers that we want to watch are the revisions to the prior month. We also want to watch forget about the unemployment rate. That means nothing to me. The average hourly work week is a forward-looking indicator. If you see a rise in the average hourly work week, that means that employers are offering overtime. That's a prelude to future hiring if they're offering overtime. You'll see time and a half reflected in average hourly earnings. Now, if you see the average hourly work week unchanged, yet average hourly earnings rise, you would think that's a good thing for the American worker, which it is, of course, but it's also inflationary. So keep an eye on non-farm payrolls. If they miss, you're going to see gold rally. You're going to see the stock market probably rally. You're going to see the dollar pull back. Now, in the pre-market, the dollar is pulling back versus the euro. Gold is rallying. NUGT is rallying. I'll get to those charts in a moment. But that's in anticipation of the news event. So if you have a profit, you want to book some profits in NUGT, fine. Take some off the table. Do it in the pre-market. These reports are again coming out at 8:30. I'm going to stand with my position. I will not be adding prior to the 8:30 announcement. So let's get to the charts. Really quick, Dow Jones Industrial Average, downtrend channel. Not quite a bull flag formation, but an orderly pullback. We could either break down or break out. I wouldn't be a bit surprised. We're oversold on stochastics. Up volume was weak yesterday. So clearly, price action that is consistent with an index that is waiting for big economic data. The transports, different story. They are really underperforming. They broke down hard yesterday, down over 1% and below the 7,700 level. So we are at our lowest lows since April. So we have a divergence between the Dow Jones and the transports. One day doesn't make a trend, but they should trade together. And the Dow Jones transports are really weak. Let's talk about the IWM, the Russell 2000, of which we are short. Testing the lower band of the downtrend channel. Volume to the downside has dropped off. So what this tells me is that traders are expecting a weak number today, consistent with the ADP number. Why would the markets rally on a weak number? It's simply because Janet Yellen, the expectation would be she'll have to halt future rate hikes and quite possibly ease rates. Potash. This is just a clear example of why we need to respect breakdowns. And look at how much we broke down yesterday. We stopped out of this trade earlier in the week. And this is a 6% yielder at last look. I'm not sure after earnings what it is, but when I bought it, it was a 6% yielder. It was down 4% alone yesterday, nearly 4%. So this is why we do not hold stocks, purely because of them being dividend plays. If they are not performing, we dump them, no matter what the dividend yield is. Stocks that we're watching, Amazon, began to break down yesterday, testing the lower band of this, let's call it a bull flag formation. If it breaks down, we'll be looking to short Amazon. Lower highs, an ultimate oscillator. So Amazon is not looking good, but it's not quite as short yet. Soon, though. PLG consolidating. We're waiting for a breakout. We may add on that breakout. If it breaks down below this lower band of support, we're out. Right now, it's consolidating. And the chart is looking good. NUGT, big day yesterday, an inside day, no new high, no new low. Volume was below average. It was a very volatile day. It would be good to see these Stokes hold 50, hourly chart. So I mentioned that we would buy on strength, and we did close above this upper band of resistance, which is good. But we didn't break out above this upper band of resistance, this primary resistance level. And we have resistance at $98 per share. And I didn't want to add more. It's so volatile. I didn't want to add more ahead of the Fed meeting. So I'll be honest, I chickened out. Also, 2-hour chart. Again, we rallied through the upper band of resistance. We didn't close above, let's call it 97.50. I was talking about 92.50 earlier in the week. It did close above that level. A lot of back and forth, not a lot of conviction, especially ahead of the jobs data. So I didn't want to get overly levered. I mean, here's a stock, or ETF, I should say, that was trading at a high last week of 123.96, traded this week as low as 86.20. That's volatility, folks. So why get overly levered? And when you take a look at the US dollar on a weekly basis, it looks good. It closed back above weekly resistance. We'll see whether or not it can hold it. Volume this week to the upside is very strong. Now, I mentioned that it was down in the pre-market, but that could change after the employment data is released. Let's go to a 2-hour chart. So a big move higher yesterday. It gapped higher, but the difference yesterday versus the prior day is that NUGT traded with the UUP. They both traded in tandem. That rarely happens. So that's a good sign for NUGT, because what that tells you is that traders believe that NUGT may buck the trend and that the UUP, the dollar, may pull back. And we did see some stalling action at resistance at 24.30. So the pullback in the dollar is not unexpected. But the macro story here is this. We recaptured support, weekly support, which had been strong support back in August of 15. But we are now at even stiffer resistance. And that resistance level was just seen a couple of weeks ago when it closed above that level the week of April the 18th, but sliced right through it last week. So we'll see, does the UUP have enough power to close strong? If it does, we need to rethink our commodity trade, because if the dollar begins to break out, that's not good for commodities. Commodities have been volatile this week. We don't want to fight it. We have profits. We want to salvage those profits. So if the dollar moves higher, we're going to need to book some profits on our commodity plays. And if the jobs data comes out weak, well then, the markets will read into that weak data that the Fed will have to do something that will be dilutive to the dollar and good for commodities. So I hope that makes sense. If you have any questions, shoot me an email. And that's it, folks. Let me get this out to you, and everybody have a profitable trading day. And we'll keep an eye on that 8:30 Eastern Standard Time jobs data. Very important. And don't worry about the unemployment rate. Ignore that. That's a rigged number. Worry about the number of jobs created and the revisions to last month. Very, very important. Also, average hourly earnings and the average hourly work week. Talk to you later. Be well.